Okay, good evening, friends. Welcome to the webinar of our Methanol Insolvency and LLP. Friends, this is another series. We are doing series for the just a minute. Sorry, there was technical hitch, so I was checking. So, friends, welcome to the webinar series of Insolvency IBC Code to be held, which is held by Meta Insolvency and Restructuring LLP. And today's topic is Masterclass on Insolvency and Bankruptcy Code 2016, relevant provisions, case laws, proposed amendments, and disciplinary orders. This is session 2 for initiation of corporate CIRP process by Operational Creditors, section 8 and 9. Last time we have taken section 7, application by financial creditor. This time we are taking application by operational creditor. And today we have with us our panelist, Mr. Ganesh Ramani. To formally introduce Mr. Ganesh, thank you, Mr. Ganesh, for your time. Thanks a lot. To formally introduce Mr. Ganesh Ramani is an advocate, business leader, insolvency professional, and registered valuer with over 25 years of cross-sector experience spanning financial service, real estate, retail, hospitality, healthcare, and education. An MBA, gold medalist in finance, excellent, and a law graduate. He combines strong financial expertise with legal acumen, specializing in capital structuring, mergers and acquisition, business turnaround, strategic planning, insolvency resolution, and enterprise valuation. He has led large-scale fundraising, including cross-border transactions, trade-added high-value acquisitions, incubated multiple businesses, and managed complex restructuring and insolvency assignments under the Insolvency Bankruptcy Code. Currently pursuing a PhD in finance, he brings a strategic, data-driven, and result-oriented approach to leadership and value creation. Welcome, Mr. Ganesh, and best of luck for your PhD. Wonderful, really finance and legal, and it's wonderful experience and your knowledge. Thanks for your time.
Thank you.
Our moderator and other panelist is Mr. Hemendra Paliwal. He is a science graduate and a qualified CA and a member of ICAI. He is a certified fraud examiner from the Association of Certified Fraud Examiners and registered IP. He is a partner at Measures Bajrang Paras and Company, Chartered Accountant, Mumbai, where he oversees corporate audit, business planning, restructuring, and virtual CFO services. He is also partner of Meta Insolvency and Restructuring LLP, with over 25 years of experience in accounts, finance, budgeting, ERP implementation, treasury management, taxation, and mergers and acquisition. He previously served as a group CFO of Zycom Electronic Security Systems Limited for 2 decades. Thank you, Mr. Paliwal. With this, I will request our presenter to Ms. Divya to start sharing the screen, or I request Mr. Ganesh if he wants to say a few words on the topic, or Mr. Paliwal, then Ms. Divya can start. Over to Mr. Ganesh.
Thank you, Dipti, for the opportunity. Look forward to this presentation. I think section 8 and 9 that is provided for the operational creditor who are deprived during various processes. The biggest dilemma that comes in section 8 and 9 is a solvent company, where it is being put up under section 8 and 9, whether it is used as a recovery forum or whether this is a resolution forum, that keeps coming up in various discussions and various fora. And that continues to be a debate going forward also, especially when an application is filed by section 8 and 9. It's an interesting thing. There are limitations for operational creditors. And this segment, in terms of what's qualified under operational creditor itself, is under discussion. And there are many judgments around that. I'm looking forward to this exciting session. I'm sure a number of cases will be looked at, and we'll have wonderful discussion together. Thank you.
Thank you. Mr. Paliwal, you want to say a few words, or we'll start the presentation?
Thanks, Diptiji, and thanks, Mr. Ganesh, for joining our webinar on section 8 and 9. As Ganeshji said, definitely the major debate is whether this is a recovery, the CIRP is a recovery module or a resolution module. So to a large extent, the Supreme Court says that this is not a recovery module. It is mainly a resolution module, and then any corporate coming with a objective of recovering his dues through CIRP is not acceptable. And there is a ruling from a Supreme Court as well. Okay, where the creditor is approaching the NCLT educating authority for recovery, it is not acceptable. It is purely when the corporates are not able to pay their dues, whether these are financial dues or operational dues, then whether Section 7 or Section 8 or 9, yeah, Section 9 proceeding can be initiated against the company. But these are section mainly for resolution, not for recovery. We'll learn more during the presentation. Let's go forward because already this is 5:10. So let's move forward.
Yeah, let's
Thank
start.
you.
Thank you.
Welcome.
Yeah, Vishwa, just start your screen share.
Good evening, everyone. My name is Vishwa, and I'm here to present the initiation of Corporate Insolvency Resolution Process by Operational Creditors, that is Section 8 and 9. Moving forward to the definitions of operational creditor and operational debt, it is defined in Section 5 and subsection 20. Operational creditor actually means the person to whom an operational debt is owed, and it also includes any person to whom such debt has been legally transferred. Section 5, subsection 21.
Just let me these two sections which are being listed here, section 5 subsection 20 and section 5 subsection 21 is one of the critical aspects of section 8 and 9, because these both sections define who are the operation creditors and what are the operation debt. Because ultimately the application under NCLT educating authority can be filed if there is operational creditors are there and operation debt is there. So when we talk about the operation creditor, means a person to whom the operation debt is owed and include any person to whom such debt has been legally assigned or transferred. When we say legally assigned, we can sell certain receivables to somebody else as well. So it can be assigned. At the same time, sometime in a corporate world, when we say that merger acquisition do take place, even the business transfer do take place. So in such case, even the business has been assigned to somebody, transferred to somebody else. So it is not the person who purchased. Sometimes it may be third parties who took over the business, may be liable for the operation towards operational creditor. The second definition says that operational debt means a claim in respect of the provision of goods and service. So here we are talking not the as per section ki financial debt. We are talking purely wherever any supplier supply any goods or services to any company. So any kind of goods, any kind of provision for services to a corporate include this. Even here we include the employment as well. In case of goods and services, to large extent, we have invoices to raised by a supplier to the customer. But in case of employment, there is no per se any invoices, but it are purely employment contract, and there is a due from employee to the debtor, yeah, corporate debtor. Apart from this, there could be any debt in respect of payment of dues arising under any law for time being force and payable to central and state government. These are the various taxes which are being levied by a central and state government under various statutes, which are being payable to the state and central government, where we don't raise any invoices, but still we are liable to make the payment to government. So even these dues comes under operation debt. Apart from this, which are being due to state and central government, there are certain local bodies which do function in India as per our law. Which we have local authorities. In case of cities, we call it a municipal corporation. In case of villages, we call it a gram panchayat. The municipal corporation do collect certain revenues from the corporates and do collect certain revenue. Gram panchayat do collect a certain revenue from corporates, and wherever whatever the agencies which are working in rural areas, they have certain liability towards these all people can fall under operation debt if any liability is there towards the debtor. But only one thing, particular thing is that when we talk about operation debt, there is at this point of time limit is 1 crore. But these limits are individually driven. No two creditors can come together and make say since our outstanding collectively outstanding is more than a crore, which is current limit, and can we file it? Neither employees come together and says ki since we are outstanding, we have 2 employees, you have 5 employees, you have 10 employees come together and says ki our outstanding is receivable from a corporate is more than a crore, we can file it. No. If any single employee had a recoverable more than 1 crore, then only he can file under this section, because if he become eligible to uh, uh, get a resolution under this section to file a application under the section 9. So these are the basically main definition for operation creditor and operational debt, what are covered and what are not covered. Thank you.
Thank you. Yeah, Vishwa.
Moving on
Yeah,
to the
move on.
section 8 of IBC, which talks about
Can I say
insolvency.
something on this? 5
Yes,
minutes?
yes.
Because since one or two critical aspects on the previous page, the definition must satisfy goods or services. So most of the times, operational creditors, for example, someone has given a security deposit. It has to be returned after the period of time, whether it will come under goods and services. So there are nuances around which one has to look at, because it has to satisfy the definition of goods and services. And if it doesn't satisfy, they have no right as of now to come and file a section 8 or 9 application. Rather, they cannot use any other modes today. So the definition of goods and services, therefore, must be necessarily satisfied, and people tend to ask variety of questions around that. So someone had given in money in advance, in anticipation that it will return back and it will be set off. Would that come under goods and services? Again, there are judgments whether if it is not doing any service, then it will not be considered as goods or services. So, Mr. Paliwala rightly said, the definition is very critical before you look at section 8 and 9 application.
Moving on
Go
to the
ahead.
section.
Thanks, please.
Can I continue?
Yeah.
Yeah.
Moving on to the section 8 of IBC, which talks about insolvency resolution by operational creditor. So it basically says that if a company does not pay, then the operational creditor is allowed to issue a demand notice or raise invoices, and within 10 days, if the debtor does not reply, then the debtor should reply within 10 days stating the reason, or showing there was an existing there existed a dispute already, and by showing that the payments were made. Coming to the section 9 of IBC, which talks about application for initiation.
To go to section 8 only. Here the simple logic is that if there is an undisputed receivable is there in the company's book, then they can send a notice to the corporate debtor stating that these are the recovery from you. And if you have any dispute against these recoveries, whether it may be invoices, if he is a supplier of goods, or in case of provision of services, or it can be a corporate debtor employee, that they can send. But here also there is 2 forms which are generally applicable in case of purely which are non-invoice backed receivables. So you can send a notice in form C, and if it is invoice backed, you can send a notice in form 4. And in case of corporate debtor to whom you send a notice, he can respond within 10 days stating either the pre-existed dispute on the particular receivables, and he dispute this receivable if there is already is a dispute on this. Alternatively, if the money has been paid by him, either he can share the copy of the check, or he can share any details of RTGS, NEFT, or whatever the details he has. So he has a choice to revert with you, or if they have already paid and there is no recovery. Then these are the various means to ensure that before initiating the section 9, the precondition is there that one should serve a notice to a corporate debtor and he seek a feedback whether the dispute exists or not exist, or whether the payment has been done by the corporate debtor for the such receivables which we are talking. So these are the 10 days, compulsory 10 days has been given, and somebody files before 10 days, the possibility is there that executive authority may not entertain such application. And that's the very critical to ensure the minimum 10 days notice has been given to the corporate debtor. Continue to section 9.
Coming to the section 9 of IBC, which talks about application for initiation of corporate insolvency resolution process by the operational creditor, it states that even if after 10 days the corporate debtor does not reply or there is no payment, then the operational creditor can apply to the adjudicating authority, that is NCLT, to start the insolvency process. And it should be done in the prescribed manner with the fee as well. And along with the application, the creditor must also submit the copy of the invoice, the affidavit which shows the dispute notice, the bank certificates, and any other proof that shows that there was no payment done. The operational creditor must also propose for a resolution professional, and the adjudicating authority should decide within 14 days whether to accept the application or not. And if they reject it, they should give the company a 7 days time to rectify the defects. Coming to this case laws under section 8 and 9 of IBC, the first case law is Visa Coke Limited versus Mesco Kalinga Steel Limited. The court was Supreme Court, and the date of order was 29th April 2025. Coming to the synopsis of this case, this case basically involves that the demand notice, which was issued by the operational creditor, it went through the KMP of the corporate debtor and it delivered at the debtor's registered office. And the case just says that it can be construed as a deemed service of the demand notice as required in the Section 8 of IBC. Coming to the facts of the case, on October 1st, 2019, Visa Coke Limited and Mesco Kalinga Steel Limited entered into a contract for the supply of LAM Coke with advance payment terms. And despite the expiry of the original period on 10th November 2019, the corporate debtor requested the supply on credit and admitted the default in payment on 25th November 2019. The delivery period was extended till 10 January 2020, and the goods were supplied, but the payment for 1700 MT remained unpaid. A legal notice on 23rd November 2020 and a Section 8 demand notice on 31st March 2021 were issued, but there was no reply, leading to a Section 9 application before the NCLT. On 24th January 2023, the NCLT dismissed the application due to improper service of the demand notice on KMPs instead of the corporate debtor, and this was upheld by the NCLT on 3rd October 2024. The major issue here was whether the demand notice under Section 8 of the IBC served by the operational creditor upon the key managerial personnel of the corporate debtor at the registered office constitute a valid service of the statutory demand notice under Section 8 of the IBC, so as to maintain a Section 9 petition for initiation of CIRP against the corporate debtor. The court here held that the purpose of Section 8 is to inform the corporate debtor, and if the notice has actually come to its knowledge, then the technical objections cannot defeat the proceedings. Thus, the court adopted a practical approach over technicality. Thus, the major takeaway here was that IBC focuses on real communication and not formal defects.
So, if it is to be put, then when CD is a corporate, CD, whom the demand notice should be addressed. Otherwise, in this KMP was there. Otherwise, whom they should address this demand notice?
Generally, the notice should be sent to the corporate debtor. But in this case, particular case, the KMP has been sent the notice at the registered office. The notice was sent to the corporate,
but corporate debtor is a company.
Yeah.
Where
MCA registered email. Deepti, MCA registered email address is there. You should certainly be sending there and to the registered address which is there in the MCA. You cannot miss out that. Apart from that, you can serve at all other places. Sometimes what happens is the registered address is the notional address. They are not there at all. So if there are multiple addresses, serve it to multiple addresses. Because essentially the purpose of serving is justice. So if you do not serve it, the other person does not have a reasonable opportunity to defend the case. So while in this case, KMP, when they said KMP, I'm assuming here it would have been served to managing director or directors who are actually running the company. So they could not have escaped it. But KMP doesn't mean that you can serve it to a company secretary or you can serve it to some other person and say, you have served it. So you cannot escape that aspect of service in my view.
So it should be addressed to director.
It should be addressed to company.
No. Service apart from that.
Company is huge. You have to address somebody. Some position, no?
No. When you're servicing it to the company. You can write it directly, doesn't matter. Directly to XYZ Private Limited, so on and so forth. From so and so demand notice in that email address and the register address, that's good enough. Receipt on that, the receptionist the people who receive it, they may not even accept sometimes, and that gets rejected. You will have a challenge. So what you could also do is you could spell your service and you can also mark to all directors to be on the safer side. So the moment you mark it to directors, you are taken care of.
Actually, these require a specific direction because these are confusing. That when legally it is registered office and it can be to director straight away. That
Correct.
will solve the situation. Why a person has to serve the demand notice to different? Because the person is that person maybe where the legal address is there and a person is holding legal position. So address to director.
That's
And
right.
mail and register post. It will go to a register office address only by register AD, and of course mail to the whatever mail available at the director. Because the argument can be that you are supplying to so many people, you are dealing, so you know the people, but they are not the people. This is a
They are not the
separate
people.
legal notice. So I think this require some direction or here to the clarification. But this also good. But you rightly mentioned it cannot be to CS because then there is a doubt of interpretation. When you say KMP are many. So you
KMP are many. Even the CFO,
to directors.
CEO, all are KMPs.
Directors are always the still point of
Mm.
persons. I think in this case,
it will be addressed to directors and at the register address. That is a legal compliance.
Ma'am, like in this particular case, look like they have made a legal point rather than a actual, because since it has not been served to company, they have taken a loophole and went to the NCLT and Supreme Court, thinking they will get some relief because the notice has not been served.
But that's only that this kind of clarification address to director served on registered office address by post, and also the mail to directors with the mail ID registered on MCA website to directors. It's enough for, I think, this kind of clarifications, solve many situations, make it easy for the.
Yes.
But in the Supreme Court case,
For
it
the
was actually
corporates.
sent to director only. See, while you have used the word KMP summary, this was actually sent to director. So,
but that I'm telling this case law. In the provision, actually, this should be their clarification. This has something guidance to the applicant here.
Yes.
The second case would be Saraswati Wire and Cable Industries versus Mohammad Muinuddin Khan and others. The court was Supreme Court and the date of order was 10 December 2025. Coming to the synopsis, this case is about a dispute that was raised after the receipt of demand notice and after the acknowledgement of liability. It is treated as an afterthought and cannot qualify as a pre-existing dispute under the IBC. Coming to the facts, on July 31st, 2021, the Saraswati Wire and Cable Industries was the operational creditor, sent its ledger for confirmation, and on 4th August 2021, the corporate debtor confirmed a payable balance of approximately 2.49 crores, subject to minor differences, after which the payments of 70 lakhs was made, and the outstanding that remained was 1.79 crores. A Section 8 demand notice was dated on 25th August 2021, which claimed around 2.65 crores, including the interest. And meanwhile, the CIRP was initiated against the corporate debtor on 6th September 2021. And the IRP, along with the suspended director, raised disputes regarding the quality and short supply. Further payments of 61 lakhs were also made after the notice. After the withdrawal of the earlier CIRP, the operational creditor filed a Section 9 application on 10 February 2023, and due to the non-filing of the reply, the NCLT admitted the application on 6th December 2023, holding no pre-existing dispute. However, on appeal, the NCLT set aside the order, filing a pre-existing dispute based on the prior correspondence and delay, leading to a further appeal before the Supreme Court. Coming to the issues, the issues here were whether there was a pre-existing dispute between the parties as to the firm's debt prior to the institution of the application under Section 9 of the IBC, warranting dismissal of application, and whether the NCLT was correct in setting aside the NCLT's order for admission on the ground of pre-existing dispute. The Supreme Court allowed the appeal and set aside the NCLT's order. It held that no genuine pre-existing dispute existed, as the corporate debtor had already acknowledged the debt and even made the payments after the demand notice. the court restored the NCLT's order admitting the Section 9 application. So here the key takeaway is that disputes raised after the demand order are treated as an afterthought and it cannot defeat the insolvency proceedings. The next case is
That's that this is the key aspect of the Section 9. Key any dispute which are pre-existed before the you get a notice can be entertained under Section 9. If these are afterthoughts, once you get a notice and you start thinking how to escape from this liability of CIRP which has been initiated against us, and you start giving some stories around it, especially when there is already ledger confirmation for a 1.56 has been shared. So to a large extent, it was purely a afterthought to avoid the CIRP. That's why the Supreme Court has been upheld the NCLT order, even though NCLT is given a certain different view. But fortunately, the Honorable Supreme Court has restored the NCLT order and says that the admission is proper and complete. Yeah, continue, Mr.
The next case is Sri Rokadoba Maharaj Ginning versus Pressing Private Limited versus Sri Venkatesh Mills Limited. The court was NCLT Chennai and the date of order was 20th November 2025. Coming to the synopsis of the case, once an insolvency petition is already disposed of, the settlement between the upon the settlement between the parties, it cannot be revived and a fresh application needs to be filed. Coming to the facts of the case, in 2017, the operational creditor filed a petition under Section 9 of the IBC against the corporate debtor. On 25th September 2018, the parties reached a settlement and the petition was closed with the corporate debtor agreeing to pay rupees 25 lakhs, in which 15 lakhs he was going to pay completely and the remaining 10 lakhs were going to be paid in 10 equal installments. Due to the non-compliance, the operational creditor filed an application under Rule 11 of the NCLT in 2019 and the petition was restored. On 10th December 2019, a second settlement was entered into the petition and the petition was again disposed of with the post-dated checks issued and the liberty granted to revive proceedings upon default. Following further non-compliance, the appellant filed an application in 2022 seeking recall of the order dated 10th December 2019, which was rejected by the tribunal on 29 June 2022. And subsequently in 2025, an appeal was filed before the NCLT challenging the said order. The issues here was whether an application for recall or restoration of the company petition disposed of on the basis of compromise is maintainable under Rule 11 of the NCLT rules in the event of non-compliance with the compromise terms, whether the order dated 10th December 2019 granted liberty to the appellant to revive the company petition in case of default by the corporate debtor, and what is the proper remedy for enforcement of the compromise order passed in company proceedings under the IND code. The NCLT upheld the rejection of the recall application. It held that once a Section 9 petition is disposed of on the basis of settlement, it cannot be revived repeatedly through recall applications, and a proper remedy is to file fresh proceedings in case of subsequent default. Coming to the next case, that is RMV.
Incidentally, there is a specific NCLT case law.
Bring that slide first again, no? Vishwa, bring that. Yeah, Mr. Ganesh.
Incidentally, there's a recent NCLT case law, I don't remember judgment, where they have given the under which conditions a recall can happen and a review can happen by NCLTs. And it's very clear, unless there's a procedural errors or something is there, Rule 11 should not be used. So you cannot use a Rule 11 to do whatever they wanted, while it emanates from Section 151 of the High Court and, inherent powers. But restricted powers are there to NCLT to recall their own order. So I don't know, first of all, how initially it happened, but later on it was rightly said. Now there's a judgment of NCLT. They have given out the list of criteria. Only those things they can do a recall.
Yeah, earlier they were allowing, but you are right that earlier.
No, the Supreme Court it clearly told Rule 11 is not something that you can. It's not like Section 142 of Supreme Court. No, everyone wants to use Rule 11. So Rule 11 is largely a procedural, principles of justice. Rule 11 is supposed to be for principles of justice, like the case of date of default ko amendment karne ke liye. That's acceptable. Other than that, you are not supposed to use that.
Yeah, go ahead. Vishwa.
The next case is RMV IT Services Private Limited versus Red Eye Services Private Limited. The court was NCLT New Delhi and the date of order was 25th November 2025. Coming to the synopsis of the case, The case involves the claims related to complex contractual interpretation or the charges that fall outside the summary insolvency framework and cannot be pursued through Section 9 proceedings. Coming to the facts of the case, in June 2018, the corporate debtor defaulted on rental payments under 6 agreements for supply of IT computer products on a lock-in basis, following which the creditor stopped raising invoices on 29 September 2018. On 13th March 2019, the corporate debtor pre-terminated the contracts via email and agreed to return the machines. A demand notice under Section 8 was issued on 28th May 2019, claiming approximately 2.26 crores, which was replied to on June 12, 2019. The operational creditor thereafter provided payment details adjusted to a differential amount and computed an outstanding of around 96.27 lakhs. However, on 25th August 2023, the NCLT Mumbai dismissed the Section 9 application, leading to the operational creditor to file an appeal before the NCLT. Coming to the issues of the case, the issues here were whether an operational debt had arisen under the 6 agreements requiring payment by the corporate debtor to the operational creditor, and if so, whether such debt was undisputed, exceeded 1 lakh, and whether default had occurred. Whether the absence of invoices from July 2018 onwards negated the existence of operational debt due and payable, whether the quantum of debt required reconciliation constituting a pre-existing dispute, whether the claim for balance rental charges post termination was contractually valid, and whether the Section 9 application was liable to be rejected for premeditated filing or non-disclosure of notice of dispute in the affidavit under Section 9(3)(b). In this case, the NCLT upheld the NCLT's dismissal of Section 9 application. It held that the claim involved disputed contractual dues, including pre-termination charges, and since a genuine dispute existed, insolvency proceedings could not be used as a recovery mechanism.
One second. I think something is wrong here. Not all the issues are determined by this judgment. Can you go back to the wordings? The very wordings were limited. Because what happens if you have listed all the issues, all these issues are not deliberated, if I understand, based on what you have written. Because you don't need an invoice. If the contract is there, and if according to the contract the payments are there, you don't need an invoice for you to prove an operational debt. However, I think what they have determined here is contractually, if certain claims are there, they are like damages because it's a pre-terminated. Those things NCLT is not authority to determine. It's some other forum. And I think to that extent, it is, I think they have terminated this contract. They have not adjudicated on the other aspects, what you have written in the issues here.
Yeah. So the important point rightly mentioned by Mr. Ganesh that invoice, if contractual obligation is there and it is executed, even though invoice is absent, it is debt. And the second thing you have mentioned about the damages and all that, which require interpretation. And that's why court step aside for that determination and this judgment is given and not admissible. Yeah, judgment should be that way you have mentioned. Yeah. Thank you, Mr. Ganesh.
The next case is MNB Engineering Limited versus Mascot Suryapur LLP. The court was NCLT New Delhi and the date of order was 27th November 2025. Coming to the synopsis of this case. In this case, it involved a service of the demand notice, and it was valid where the notice reaches the corporate debtor through effective communication, and minor technical defects will not invalidate the notice. Coming to the facts of the case, on 6 January 2022, Mascot Suryapur LLP, who was the corporate debtor, issued a purchase order to MNB Engineering Limited for setting up an industrial unit in Surat, Gujarat. The work was completed on 15th March 2023. Invoices were raised and a completion certificate was issued. But despite partial payments, outstanding dues of about 1.64 crores remain unpaid. A legal notice dated 30th November 2023 failed to elicit payment, followed by a Section 8 demand notice on 30th December 2023, which was returned at the registered office. An initial Section 9 application was withdrawn due to the technical defects, and a fresh demand notice dated 18th March 2024 was issued. But again, the notice to the registered office was returned as refused, though the services via email and at the head office was claimed. On 28th June 2024, the NCLT Ahmedabad dismissed the Section 9 application for improper services of notice, against which an appeal was filed before the NCLT under Section 61 of the IBC. Here, the major issue was whether service of demand notice under Section 8 of the IBC, as sent by the operational creditor to the operational corporate debtor, was sufficient for initiation of CIRP under Section 9 of the IBC. The NCLT held that the Section 8 demand notice was validly served through email and at the head office, even though the notice sent to the registered office was returned. It observed that the refusal or non-acceptance of notice cannot be used as a defense by the corporate debtor, and accordingly, the NCLT's order was set aside and the matter was restored for consideration of the Section 9 application. The next case is Yusuf Malubhai versus Anuj Maheshwari, who is the RP Steel Expert Industries, Indore Limited, and another. The court was NCLT New Delhi, and the date of order was 10th December 2025. In this case, a defense of payment that was unsupported by the credible evidence could not be treated as a genuine dispute to resist the admission of Section 9 application. Coming to the facts of the case, on 17th October 2019, the operational creditor issued a demand notice under Section 8 of the IBC to the corporate debtor. On 26th October 2019, the debtor replied by issuing a notice of dispute. In 2020, the operational creditor had filed two separate Section 9 applications. The first application was claiming for around 2.32 crores, and the second petition was a completely different petition. The NCLT Indore bench on the 12th June 2025 passed the admission order admitting the Section 9 application on commencing CRIP. And post June 2025, the ex-director of the corporate debtor filed an appeal under Section 61 of the IBC before the NCLT challenging the admission order. The issues here were whether there were any discernible or bona fide pre-existing dispute relating to the operational debt claimed by the operational creditor so as to render the Section 9 application not maintainable, whether the corporate debtor's defense of full discharge of liability through cash payments supported by cash receipts can constitute a genuine pre-existing dispute, whether the police complaints dated 8th August 2019 and 9 August 2019, civil suit before District and Sessions Court Indore, and anticipatory bail proceedings before High Court of Bombay establish a pre-existing dispute within the meaning of Section 5(6) of the IBC, whether the reply or the notice of dispute dated 26th October 2019 effectively raises a credible pre-existing dispute, and whether the filing of two separate Section 9 applications by Haji Shaddad and Sons and Mars Exports and the status of sole proprietorship as an operational creditor affect the maintainability of Section 9 proceedings. The NCLT upheld the NCLT's order admitting the Section 9 application. It held that the corporate debtor failed to establish any genuine pre-existing dispute, and since the operational debt and default were proved, the initiation of CRIP was valid and the appeal was dismissed.
Again, I think for all of us,
Yeah, go
this
to
is
other slide.
this is a summary test. This is a summary court. So they are only interested whether there's a debt, there's a default, there's a dispute. So they are not here to determine suppose if for example I have supplied goods and services and there's happening, but I have a dispute at a personal level, at the individual level on some other thing. If it has nothing to do with goods and services, that was also not coming in a pre-existing dispute. Pre-existing dispute should be specific to the transaction or the goods or services that are supposed to be entered, and whether because of that dispute an outcome has happened in terms of default. So a lot of time what happens is they mix up in terms of civil suit and other courts, thinking that this is a pre-existing dispute. It is not actually welcomed by the court. So even if someone puts it up, a lot of justification should be given to prove that this particular other fora are used primarily because of the operating aspect of the dispute. So I think this is primarily used many a times as a method to deflect the originality of the case.
The next case is Bhuvan Kumar Gupta versus Maverick Developers and Colonizers Private Limited and another. The court was NCLT New Delhi and the date of order was 11th December 2025. The synopsis of the case is that if a dispute regarding the operational debt existed prior to the issuance of Section 8 demand notice, then the initiation of CRIP under Section 9 is barred. Coming to the facts of the case, on 21st September 2020, the corporate debtor entered into a memorandum of understanding with Gigabyte Systems India LLP for purchase and finance facilities, followed by a purchase order issued by the operational creditor in October 2020 for the supply of HDPE pipes and a second MOU on 21st May 2021. The operational creditor made its last payment on 24th August 2021, and disputes arose in October 2023 when the operational creditor sought account confirmation and objected to certain ledger entries involving the Gigapipe systems, which had already issued a notice of dispute on 18th November 2023 and replied to by the corporate debtor on 20th November 2023. A Section 8 demand notice dated 11 July 2024 claiming about 3.05 crores from alleged excess payment was denied by the corporate debtor on 20th July 2024, citing pre-existing dispute, which was also reflected in NESL records on 21st October 2024 as disputed. Subsequently, a Section 9 application was filed on November 12, 2024, claiming rupees 3.84 crores. And on 1st August 2025, the NCLT granted an interim stay on the CIRP in appeal filed by the suspended director. The issue here was whether the existence of a record of dispute in the information utility and or a notice of dispute received by the operational creditor mandates the rejection of Section 9 application under Section 952D of the Insolvency and Bankruptcy Code 2016, whether there was a pre-existing dispute between the parties prior to the issuance of demand notice and filing of the Section 9 application, whether the adjudicating authority erred in admitting the Section 9 application despite the existence of record of dispute and notice of dispute. The NCLT found that the disputes existed before the Section 8 demand notice, including ledger disputes and objections recorded with the NESL. Since a genuine pre-existing dispute was established, the Section 9 application was not maintainable, and accordingly, the CIRP proceedings were stayed. The next case is FTI Consulting India Private Limited versus MGF Developers Limited. The court was NCLT New Delhi, and the date of order was 23rd December 2025. In this case, where the disputes relating to the scope of services and payment liability existed prior to the demand notice, the application under Section 9 of the IBC was not maintainable due to the presence of pre-existing dispute. Coming to the facts of the case, on 26 February 2020, the FTI Consulting India Private Limited was engaged by MGF Developers Limited for expert services in an arbitration in London with an addendum executed on 5th October 2020. And after the departure of Mr. Montek Mayal from FTI on 14 January 2022, FTI raised multiple invoices between May 2022 and February 2023. And the corporate debtor made payments totaling to US $469,600, including a payment on 28th April 2023, while FTI also relied on invoices dated 25th April 2023. Subsequently, the corporate debtor engaged Mr. Mayal through Opson Partners on 1st June 2023. FTI issued a Section 8 demand notice in July 2024, claiming US dollars up to 3.67 crores, which was disputed by the corporate debtor on 25th July 2024, followed by the FTI's response on 4th November 2024. A Section 9 application was filed on 10th January 2025, and after filing an affidavit on maintainability as directed by the NCLT, the application was rejected on the ground that the dispute was contractual in nature and not suitable for the IBC proceedings, which costs imposed, leading to an appeal before the NCLT. The issue here was whether the reply dated 25th July 2024 to the Section 8 demand notice constituted a valid notice of dispute within the meaning of Section 8.2 of the Insolvency and Bankruptcy Code 2016. Whether in view of such notice of dispute, the adjudicating authority was bound to reject the Section 9 application under Section 952D of the Code. Whether the dispute between the parties is purely commercial or contractual dispute relating to the performance, scope of work, and quantum of fees not amenable to adjudication in Section 9 proceedings under the IBC. Whether there existed a pre-existing dispute, as in the date of demand notice arising from the exit of Mr. Montek Mayal, subsequent engagement through Osborne Partners, overlapping work and payments made sufficient to bar initiation of CIRP by the operational creditor. The NCLT upheld the NCLT's order over dismissing the Section 9 application. It held that a genuine pre-existing dispute existed regarding the scope and continuation of services, and since the IBI cannot be used to recover disputed contractual claims, the appeal was dismissed. The next case is Lords in Hotels and Developers Private Limited versus Arya Raj Club and Resorts LLP. The court was NCLT New Delhi, and the date of order was 7 January 2026. 2026. In this case, the technical objections regarding invoices, GST, or contractual documentation do not constitute a genuine dispute when services were actually rendered and the operational debt is otherwise established. Coming to the facts of the case, on June
In the facts of the case, you can skip the date and too much details. You can also brief that. Okay?
Okay.
Because there are many cases, no? So we can cover everything.
Okay. So an MOU was executed between between Arya Raj Club and Resorts and the Lord Saima Hotels, with the management responsibilities assigned to the Lords in Hotels and Developers, followed by a sales and marketing agreement and a franchisee and management agreement, providing a monthly fee of rupees 3 lakhs, and a subsequent MOU was also acknowledged with a payment of 41.3 lakhs towards the pending management fees. Alleging non-payment, the appellant also issued a Section 8 demand notice claiming around 1.97 crores and filed a Section 9 application for the initiation of CIRP. The corporate debtor later replied to the demand notice and invoked arbitration. The NCLT Ahmedabad bench dismissed the Section 9 application on the ground of invalid dues and existence of pre-existing disputes. The issue here was whether the dues claimed by the appellant constitute operational debt under the IBC and meet the statutory threshold for initiation of CIRP under Section 9, whether the absence of valid invoices and proof of GST payment as required by Regulation 2B of the IPBI, Regulation 2016 invalidates the claim, whether the appellant can claim amounts under the MOU dated 26th August 2021 and the SMA, given the lack of privity of contract, whether the interest claimed by the appellant is admissible under relevant agreements, whether there existed pre-existing disputes between the parties prior to the filing of Section 9 application, thereby barring initiation of CIRP. The NCLT held that the operational debt and default were clearly established and exceeding the statutory threshold. Since no pre-existing dispute existed, the corporate debtor failed to pay despite a valid demand notice, and the requirements of Section 9 were satisfied. Accordingly, the petition was admitted, the CIRP was initiated, and the moratorium was declared, and an IRP was appointed.
So here
This is
Yeah,
interesting.
go ahead.
Go ahead, Dipti. This is interesting actually.
No,
Go
no,
ahead.
go to that slide, no? So here also what Mr. Ganesh was telling earlier, that invoice absence is not necessary. The same thing again here said, absence of valid invoice and proof of GST payment, which generally technically they argue and say there is no GST payment invoice, is not necessary, as you were mentioning earlier.
Yeah. Other thing is, there was an interesting argument that happened before the bench 3 in Bombay. There was a clear GST default was there. Invoices were there, GST default was there. So the counsel said, I hereby concede that I have violated GST payment. That let the GST department come after me. But that doesn't absolve the CD, his liability, and my rights under the IBC law. So nowhere under the provision says that if I have, as a creditor, I have violated, that doesn't give me a right to pursue. Now, what would happen is, if it gets admitted, the tricky part is this: when tomorrow an RP comes into the picture, can an RP accept invoices where GSTs are not paid? I mean, when the person if a person does not pay GST, a creditor, company cannot get an input credit. So I, as a creditor, filed an application before NCLT, got the application admitted, saying the default is there. But for the services that I claimed and I raised invoices, I didn't pay to the GST department any GST. So the CD could have never taken an input credit, whether that will stand scrutiny at the court level and at the RP when he is accepting the claim level. Because claim verification, GST is a necessary ingredient. A pro forma invoice, yes, it is not accepted. But an invoice where the other person did not comply, he who seeks equity must do equity. So that's a tricky part. That is also not addressed. But yes, from a Section 9 or a Section 7 application, it is only sum and substance is a debt and a default. It doesn't look at the person who came in, whether he satisfied his side of the story. That is still pending.
So what is your view that if that kind of this case is admitted, where the on invoices GST is not paid?
So the answer to that is it's a curable offense. So for example, if someone who did not pay, I would say that I would accept your claim form Okay, because you are asking me a right, but I did not get anything. So that's to that extent. You pay penalties and cure your claim because GST allows you to cure your claim. Na? 100 rupees per day, you make the payment and then I'll accept your claim. So that is something it will go to the court.
So provision for contingent liability and make them good that liability, then only you accept.
Yeah, because when RP is doing it, RP is supposed to collate all the claims which meets the requirement. A claim which did not meet the requirement where we have not paid GST, RP can put it up, taken it up, and it will go for discussion. Because RP says, I am legitimately deprived of input credit by this person by not doing it. So there's a legitimate argument for RP perspective.
Okay, that is a
Yeah,
different.
ma'am, basically, on a GST law is very clear. If within 6 months you don't pay the money, so even anyway GST input has been denied. Anyway, there is a creator can still pay it and regularize it from his end. But RP has the upper hand. If he find that the creator has not filed the GST or one the necessary credit is not been passed to us, so why we should pay GST? So that's what Ganesh is saying. There is a dispute and he can come to table. Ki, sir, why I should pay GST, which is a credit has not been received. I received a goods, I will pay for the goods, but I have not received a credit of GST. Why should pay for GST, which I am not getting?
Okay.
That's a say, na? That's correct, now.
Okay, Vishwa. Next.
Yeah.
The next case is Dharya Mitesh Bhai Shah versus Keshav Kaneja, RP of Gensol EV Lease Limited. The court was NCLT New Delhi and the date of order was 9 January 2026. This case involved the admission of Section 9 application before the expiry of time granted to the corporate debtor to file a reply that violates principles of natural justice, and such admission order is liable to be set aside. Coming to the facts, the notice of Section 9 application was served upon the corporate debtor, granting a 7 days time to file its reply before the NCLT. The NCLT admitted the Section 9 application and initiated the CIRP before the expiry of 7-day reply period without waiting for the debtor's response. Aggrieved by the premature admission, the suspended director filed an appeal before the NCLT, alleging violation of principles of natural justice. The major issue of this case was whether the order admitting the Section 9 application was passed in violation of principles of natural justice by not allowing the corporate debtor the full 7 days time to file a reply after the receipt of notice. The NCLT held that the principles of natural justice must be followed even in time-bound IBC proceedings, and since the corporate debtor was not given adequate opportunity to present its case, the admission order was set aside. The matter was remanded to the NCLT for reconsideration.
I can't understand how did NCLT pass this order. There's something more than what is written. No NCLT would pass an order. If they have given time, why will they pass an order?
It
Something
happens in
amiss.
certain cases. Even certain cases, NCLT passes the ex parte order as well.
Slide, no?
Sorry, madam? Sorry?
No, I'm telling Vishwa. Vishwa, go to earlier slide, no? Put that.
Advocate Ganesh, generally it happens in NCLT code where sometimes even ex parte orders are being issued against the party. And these are the technical, these are mandatory 7 days. If somebody is not given a proper 7 days notice to a corporate debtor to rectify anything, yeah, you want to respond. So these are the minimum requirement by a law. If that has
No,
not been fulfilled by...
I'm only asking ki no NCLT. I mean, of
Yeah,
course, I will certainly read this application for sure. How could NCLT say that I have given 7 days time to reply, and before the 7 days, why will they pass an order?
Yeah.
Something
So
is
sir,
certainly
these
an
are
amiss.
on record mistake हो जाता है NCLT से.
Chalo, next.
The next case is Nimbad Fashions Limited versus Saundara Raja Mills Limited. The court was NCLT Chennai bench and the date of order was 4th November 2025. In this, the initiation of arbitration or dispute regarding the quality of goods prior to the demand notice constitutes a pre-existing dispute and bars the admission of section and application. Coming to the facts, the parties had entered into an agreement for the supply of fiber by the petitioner to the debtor for processing into yarn, which was continued through a subsequent agreement, and a buyback agreement was also dated further governed with their arrangement under which the petitioner supplied for the raw materials for the processing with the buyback mechanism. And the petitioners continued supplying the materials and raised invoices amounting to around 4 crores. And in 2024, a demand notice under Section 8 of the IBC was issued claiming the said 4 crores, including interest, which was disputed by the debtor in its reply. And subsequently, the arbitral proceedings were also initiated, and both the parties they were filing their claims and counterclaims. The petitioner claimed around 7 crores, including the working capital. And thereafter, since they could not reach a decision, the Section 9 application was filed seeking initiation of CIRP against the corporate debtor. Here, the major issues were whether there existed a pre-existing dispute between the parties prior to the issuance of Section 8 demand notice under the IBC, whether the initiation of arbitral proceedings after the demand notice constitutes a bar to the admission of Section 9 petition, whether the operational debt and the default as claimed by the petitioner are established and above the statutory threshold, whether the alleged discrepancies in the amounts claimed in the demand notice and petition constitute a dispute under the IBC, and whether the working capital advanced by the petitioner qualifies as an operational debt under the IBC. The tribunal found that the corporate debtor had raised disputes regarding the quality or supply of goods before the insolvency application, and since a genuine pre-existing dispute existed, the insolvency proceedings could not be used to recover the disputed dues, and accordingly, the Section 9 application was held not maintainable and was dismissed. The next case is Vinayak Alloys Private Limited versus Anam Steels Private Limited. The court was NCLT Chennai bench, and the date of order was 26 November 2025. In this case, the operational creditor established the operational debt through invoices and ledger accounts, and no dispute was raised, and the requirements for CRIP under Section 9 were satisfied. Coming to the facts, the Anam Steels Private Limited is the corporate debtor. They incorporated with a share capital of rupees 5 lakhs, which was also acknowledged by the tribunal, and also it acknowledged its liability towards the applicant in its records, and the operational debt arising from supply to steel scraps under undisputed invoices amounted to around 7 crores, which included the principal and the interest as well. The liability was further confirmed by the Honorable Madras High Court, and subsequently a demand notice under Section 8 of the IBC was issued, but no reply or dispute was raised. Accordingly, the applicant filed the Section 9 application before the NCLT Chennai bench, and which was supported by a ledger statement, acknowledgement of liability, the High Court decree, and the chartered accountant certificates of confirming the non-payment. The major issues here were whether the applicant is an operational creditor and the debt in question is an operational debt within the meaning of the IBC, whether the requirements for admission of an application under Section 9 of the Code are satisfied, including the existence of the debt, default, absence of pre-existing dispute, and statutory compliance, whether the decree of Honorable High Court alters the character of the debt or bars initiation of proceedings under Section 9, and whether the application is within the limitation and maintainable under the Code. The NCLT held that the operational creditor proved the existence of operational debt and default through the invoices, ledger statements, and a High Court decree. The corporate debtor failed to reply to the Section 8 demand notice and did not establish any pre-existing dispute, and accordingly, the Section 9 application was admitted and the CRIP was initiated.
1 second. This is important, Dipti, for our discussion. I am actually to research this particular case, what they said, because once a decree is issued, it is a decree which takes a right as a decree holder. It no longer takes the position of an operational debt or a financial debt. So there's a High Court of Tripura judgment is there on this, where they have said, if you read the definition of the debt, they put basically financial creditors, operational creditors, and decree holders. So a decree holder is neither a financial creditor nor an operational creditor. And that judgment was even upheld by Supreme Court, saying that I will not interfere. Now, recently, I believe there's one more thing, probably the color of debt. People are mistaking on a judgment of Suresh Kumar, I think, Dana Bank judgment. The color of the debt won't change. So if there's an operational creditor is there, if that operational debt has been taken by a financial creditor, but to the extent of that debt, he will continue to be an operational creditor. That we all know about it. But there's a confusion because here, while the debt is an operational debt, the moment you get a decree, the status changes. So I think this judgment needs to be seen from that angle. And I'm not sure whether that's the question I actually asked other day also, and further issue. But the High Court of Tripura judgment on the decree holder. And decree holder is given a separate status under the IBC. So therefore, in the home buyers also, the home buyers who would have gone to RERA or other places and got a decree. When application is filed by home buyers and it gets admitted, whether the home buyers who got a decree, they form part of the financial creditors is a question mark. Unless a judgment comes in, which I'm not privy to it, they do not come and sit in the COC. Decree holders are treated as other debt.
They can
But-
file the claim, they are creditor, but they are not neither operational creditor, neither financial creditor.
Yeah, so unless the summer judgment would have given in principle, which I am not privy yet, but decree holders, that's why I said this judgment will be of suspect if it is a decree holder. We need to see if anything else has come up on this. High Court of Tripura judgment was, I think, 2022 or 23 and upheld. Supreme Court said, I am not interfering in this judgment. So,
But he will continue as an operational creditor, or it will be treated differently.
if you see the definition, they will be treated as decree holders.
But where will be
Now they
classified
can-
in
Other
waterfall?
debt, other creditors. Waterfall, that is the funniest part. The people who get a decree holders, under the waterfall, they're below other creditors. So I think someone would have gone up, especially home buyers, it will be a challenge because the home buyers who get a decree, there will be a challenge. So unless there's some other judgment which try to look at in principle discussions, as of now, I mean, not to my knowledge, at least I have not come across an alternate judgment to that.
Really interesting. Yeah, Vishwa.
The next case is Chandan Kumar Singh versus Source.com Private Limited. The court was NCLT Guwahati bench and the date of order was 9th December 2025. This case involved a claim that arose from a private settlement agreement and not from the supply of goods or services. And it does not fall within the definition of operational debt under the IBC. The facts of the case are Mr. Chandan Kumar Singh, who was a petitioner, he filed a petition under Section 9 of the IBC seeking initiation of CIRP against Source.com Private Limited for the default of payment of around 3.5 crores as operational dues. The petitioner claimed entitlement to remuneration, dues, and ESOP benefits for services rendered to the respondent company since 2008 and alleged that his directorship was unilaterally revoked to evade obligations. During prior CIRP proceedings against the respondent company, the petitioner executed a private settlement agreement with the suspended director, which acknowledged the liability and stipulated the payment of 3.5 crores in 3 tranches. The respondent company allegedly defaulted on the PSA, leading the petitioner to issue a demand notice under Section 8 and subsequently filed the present petition under Section 9. Also, the respondent company contested the maintainability of the petition, asserting that the PSA was a personal agreement with an individual and not the company, and that substantial disputes regarding the PSA were pending before the High Court and the police authorities. The issue here was whether the debt sought to be enforced by the petitioner constitutes an operational debt owed by the respondent company within the meanings of Section 520 and 521 of the Code, whether the respondent company can be treated as a corporate debtor for the purpose of maintaining a petition under Section 9 of the Code, whether the existence of substantial disputes regarding the PSA and its validity precludes initiation of CIRP under Section 9 of the Code, and whether the petition is maintainable under the Code in light of facts and legal contentions raised. The tribunal held that the claim arose from the personal settlement agreement executed by an individual and not the company. Since the validity of the agreement was disputed and pending before a civil court, it could not constitute an operational debt, and accordingly, Section 9 application was dismissed as not maintained.
Yeah, 1 minute. Go to that slide. Mr. Ganesh, here the settlement is there that first he filed the Section 9 application. They entered into settlement. Vishwa, correct me if I am wrong in fact.
Yes.
That settlement was not performed. So this individual filed the case again. That settlement is not done and these are the breaches and this the amount is more than correct. And now, so since we have seen earlier that revival of application is not allowed once that, right? So now he is making fresh application, but fresh application also they are telling that, since this is a personal settlement agreement, individual capacity entered, so he is not OC.
Oh, see, certainly the facts are beyond what it is stating here. When a corporate debtor enters into a settlement agreement, okay, that settlement agreement may say some XYZ is going to pay on their behalf. But settlement is not a personal settlement, it should be the operator company. So if the settlement where they mistook, they did not capture this well, and the individual fails, so then you cannot come back and say the settlement agreement has failed. So I'll give one example around the guarantee here. What happens is a company, a financial creditor, OTS is done normally, right? OTS is done, so there is a settlement done. So in the settlement done, they did not take a liberty to file fresh application. The OTS terms are very important, where you capture what happens in the case. So there are two scenarios. One is you don't right to file liberty to file application. Second thing is original terms will be applicable. If then you are questioning about your entire limitation period. So in both the scenarios, the judgments are very clear. You need to establish always between the two principal parties, operational creditor and the corporate debtor. As long as you establish the link between the two, NCLT has jurisdiction. If you bring in a third element without establishing the link, you cannot survive.
Yeah, got it. Okay. Yeah. Which one next?
The next case is Voyager Trading Partners LLC versus Vittal Cashew Industries Private Limited. The court was NCLT Kochi bench, and the date of order was 7th January 2026. In this case, where the corporate debtor accepted the delivery of goods, acknowledged the liability, and also made a partial payment, the dispute arose later that it cannot be treated as a genuine pre-existing dispute to defeat a Section 9 application. Coming to the facts of the case, in June 2024, the Voyager Trading Partners LLC entered into a master sales agreement with Vittal Cashew Industries Private Limited, who was the corporate debtor, followed by an undertaking confirming the obligations. A pro forma invoice was partly paid with 20% advance, and a commercial invoice for US dollars was accepted along with the bill of exchange. The goods were delivered and utilized between November and December 2024, but the payment was due on 7th February 2025, which remained unpaid. A demand notice was issued where the liability admitted and the time was sought, followed by a partial payment of totaling US dollars up to 2.6 lakhs between March and July 2025. And a statutory demand notice under Section 8 was served on 23rd April with continued acknowledgement of liability, and an outstanding default stood at around 3.22 crores, and a Section 9 application was filed before the NCLT Kochi bench within the limitation. The issues here were whether the petition under Section 9 of the IBC is maintainable in light of the alleged pre-existing dispute regarding the quantum of operational debt, whether the operational creditor has established a default in payment of operational debt exceeding the statutory threshold entitling initiation of CIRP against the corporate debtor, and whether defenses raised by the corporate debtor, including financial stability, part payments, and alleged misuse of IBC, are sufficient to defeat the petition. The NCLT held that the operational debt and the default were clearly established and exceeded the statutory threshold. The corporate debtor had accepted the goods and acknowledged liability but failed to pay despite the Section 8 demand notice. Therefore, the Section 9 application was admitted and CRIP was initiated. The next case is Nivaya Resources Private Limited versus Sahaj Vishwas Urja Private Limited. The court was NCLT Indore bench, and the date of order was 20th January 2026. In this case, the non-mentioning of the date of default in the demand notice under Section 8 of the IBC is a curable procedural defect, and when the existence of operational debt and the default is otherwise, we establish the Section 9 application cannot be rejected on this technical ground. Coming to the facts of this case, Nivaya Resources Private Limited, who was the operational creditor, and Sahaj Vishwas Oja Private Limited, the corporate debtor, they entered into a coal supply agreement, and the date of default was later asserted on 5th April 2019. The date of default was asserted by the operational creditor as the first date when the payment became due and was not made. In 2020, the invoices relating to the supplies were raised and later annexed with the demand notice, which became relevant for objection under Section 10. Later on, the operational creditor issued a Section 8 demand notice. However, the notice did not expressly mention the date of default, and a Section 9 application was filed before the NCLT for initiation of CRIP. Coming to the issues, the major issue here was whether the date of default can be changed when the pleadings stand completed, and whether the non-mentioning of date of default in demand notice issued under Section 8 of the IBC invalidates the demand notice. The NCLT held that the procedural defects like omission of the date are curable, especially when no prejudice is caused, and it allowed the amendment of pleadings. So this case establishes that IBC prioritizes substance over technical defects.
I recommend to read Prashant Hegde Supreme Court judgment delivered, I think, in February 26 or January 26. It categorically talks about this. The purpose of date of default is only for limitation purpose. So it is nothing beyond that. So if people are mistaken to say and question on date of default, yes, date of default must be mentioned, but the purpose should be looked at it in the overall scheme of things.
Coming to the Insolvency and Bankruptcy Board of India disciplinary committee orders, the first order was dated on 8th January 2026. Here the contravention deals with the lack of due diligence in filing insolvency proceedings, and here a section 94 application was filed without attaching the personal guarantee deed, which is the most basic requirement, and as a result the adjudicating authority dismissed the application as non-maintainable. Further, the bank had already informed the RP that a person was a co-borrower and not a guarantor and requested the withdrawal of the application. Despite this, the RP continued the proceedings, which also hindered the securitization and reconstruction of financial assets and enforcement of Security Interest Act recovery proceedings. The submissions here were the RP submitted that he was appointed in a situation of urgent recovery proceedings. The application was filed in haste to protect the creditors' interest. He acted based on the representations made by the debtors. He argued that he had already withdrawn from the assignment on 3rd July 2023 to avoid controversy. Therefore, the defense here was mainly based on urgency, reliance on debtor statements, and shifting the responsibility to the tribunal. The DC observed that the application was filed in haste without proper documents. A false statement was made that the guarantee had been invoked, and the timing suggested that the filing was intended to trigger the interim moratorium and the delay recovery proceedings. Most importantly, the DC clearly stated that duty to verify documents lies with the RP and not the adjudicating authority. Therefore, the DC cancelled the registration of the RP. The second date of order was 13 January 2026. The first contravention here was a failure to take control and custody of the assets, which is one of the most critical duties of an IRP under CIRP. In this case, the CIRP had already commenced on 10th July 2023, and the allegation was that the IRP delegated operational control to the suspended director merely based on an undertaking without prior approval of the Committee of Creditors. Further, the IRP was unable to explain profits and customer realizations during that period, which indicated lack of actual supervision. He submitted that he had not delegated full control and only limited authorization was given. It was necessary to continue business as the going concern, especially due to time sensitive contracts, and all the actions were disclosed to the COC. Here on the contravention of custody and control of assets, the DC analyzed that the suspended director was in fact given full operational control to an undertaking, and there was no documentary proof showing that the delegation was limited or conditional. There was no prior approval of or even ratification by the COC, and importantly, these actions were not properly disclosed in the meetings. Because of this, the DC concluded that the IRP had failed to exercise independent control, which is the core statutory responsibility. Coming to the second contravention, which was failure to comply with the GST laws. This contravention is a major requirement during CRIP. The DC noted that as per the CBIC circular dated 23rd March 2020, a fresh GST registration is required during the CRIP, but the IRP did not obtain a new registration and allowed the suspended management to file a GST return. The IRP argued that no new business was carried out and only the existing contracts were completed. So, fresh registration was not necessary, and there were technical issues like the lack of GST portal credentials. Therefore, the submissions or the IRP defenses was based on practical necessity, continuity of business, and claimed supervision rather than complete delegation. On the contravention of GST compliance, the DC rejected all these arguments and gave a very strict interpretation that the GST circular clearly mandates fresh registration within 30 days. There is no exception for non-operational companies, and the CRIP creates a new management structure. So compliance must be fresh, and the IRP is personally responsible for ensuring the legal compliance. Because of these two major failures, the DC held the conduct to be negligent and suspended the registration of the IRP for 1 year.
Are you in agreement deeply with this idea? Non-operating company where GST is not required, today GST is not taken for by those people where they do not cross the threshold, they don't operate.
Yeah.
How can they say that it is mandatory you have to take it even if you know that there is no requirement of GST? This is something beyond. I mean, it is stupidity also because it will challenge, because officially GST, what it says is, where suppose if I have an operating company where I need GST, threshold I'm crossing, it makes sense for me to take GST. But forcibly a company I'm not operating, why should I take GST?
I think that what was happening earlier, that they were not able to file any GST return, and because the failure to non-compliance earlier, and they want to comply, they were not able to do. So they worked out that with this new number you can do the compliance. I think that was the logic, and that's why they are.
See, GST, what happens is, the old non-compliances, unless you pay them, it doesn't happen. So they have come with this circular. This circular only says that there is a provision for the RPs to within 30 days they can take registration. It doesn't say that a company which does not require a GST registration. But if you see what is written here, we need to read this. Can you go back to the previous slide?
Yeah, they are telling that compulsory registration for CRP, new registration is compulsory. The moment
I think we should write to the GST IBBA now. So this finding should be challenged, because officially under the law today, if I am a company not crossing threshold, I don't need to take GST.
Right.
If I go into insolvency for some reason,
I have to do it.
What is this nonsense? So I think this needs to be challenged, and this is to be written to the department.
Discuss and reply and suggest.
I will certainly write
Advocate
this.
Ganesh, I spoke to certain consultant of GST because I had two companies which has no business at all, and there was one of the critical aspect: the advocates are being hired by these companies, and to a large extent, the GST is on reverse charges on basis for the advocates. Otherwise, this company don't render any services. But there is a specific exemption for GST for an advocate. In case of you are hiring an advocate and your company is not liable to pay GST, so no need to pay GST on advocate on a reverse charges basis. And they says that don't take registration for such companies where business is not there. But in this case, there was continuing business, and why he did not take, because continuation convenience के लिए नहीं लिया उसने.
This is a very specific case. But the
Here
finding
he
what
said
is written
because
here,
of convenience ki past ke contract were continuing. So he did not took a new registration, which is against the law. If there is a revenue generated and there is a tax collected, new number should be taken to avoid the mess of past non-compliance. Because sometimes you are not able to access even GST portal.
correct. So
Because of
therefore,
past
this sentence is
non-compliance.
incorrect. I'm saying that if that is what you are saying,
possibly.
this is a problem here. Because it will be a dangerous precedence otherwise.
Yeah.
नहीं वो सर्कुलर पढ़ना पड़ेगा डिटेल में सर.
Depend on business operation.
नहीं वो circular need to be read in detail because this is just one line. We need to read and understand the circular what is.
I have not taken GST new number. In my case, where there's nothing is there, I record in saying that there's no business. I come within the threshold. I will not take GST. It doesn't make sense to take GST.
नहीं we have also not took. So the same goes with us, because there are certain companies which do not have business at all. So it doesn't make sense to take a GST registration and start complying on even quarterly basis.
Yes.
We were able to finish at least by 6:30. I thought that it will cross that. Okay, I think we have finished in time. Actually, we have 1 hour, but almost 1.5 hours. I don't see any questions. Anyone wants to raise hand or speak, then they can raise the hand. Recording will be, Miss Rinku will be on our YouTube channel, Decoding Laws with Mehta and Mehta. So that you can subscribe or you can go and it will be available. Disha just put our link, no?
Yes, ma'am.
Okay. Anyone wants to say or raise the question regarding this, or any views, any participants? If you want to speak, you can raise your hand. Otherwise, we think that no one is interested. I think it's everyone is clear. We discussed in depth. Thanks, Mr. Ganesh. Thanks a lot for your
Thank you.
lot of understanding of the case laws and the issues involved and all that. Thanks a lot. Thanks, Mr. Paliwal,
Thank you.
for your inputs as well. Thank you, Vishwa.
Thanks, Mr. Ganesh.
Thank you, Dipti, and thank you, Mr. Paliwal. Thanks, Vishwa.
Thank you, Dipti ji.
Wonderful presentation.
And
Thank
thank
you.
you,
Thank
Vishwa
you,
as well.
everyone. Thank you.
Thank you.
Thank you.